Hey everyone, Nick Shaheen here looking at Roku again. I recently did a video on 12.4, which is this candle right here. This is a daily chart for Roku, and I said if I was long, I said first of all it has the chance to fill the gap, because that was a question at the time. But if I was long, I would start booking, because this had been prior contention area. Yes, I've seen prices above, but they sometimes overshoot, and this might be the real level that they want to contend at. So that was almost prophetic to the point to the dollar, because since then it has given up some. I know some of you will probably be upset by me saying that we could have seen this coming. I couldn't have seen this coming. I merely said that it's a good place to book profits, and I also said in the video, you can go back and review it, I wouldn't start longs until I saw them go above and close above the neckline. They went above, but they never closed above the neckline. But again, it all depends on the timeline. Somebody's looking at it. The other day I got trolled on Twitter and bombarded and called all kinds of names because they had an issue. They were wrong, but anyway, this is the same case. So today somebody said something about it, and it's down. The day the 17th, it was down a lot more. Maybe it was yesterday, I don't know. Somebody downgraded it. Oh, wait, the CFO left. That's what it was. First of all, unless the CFO was leading the company, why would that matter much? So the dip on that from this concept, selling it is wrong on this concept. Selling it 3-4%, whatever it fell after hours, is wrong. So what if the CFO left? It's not like they were cheating or anything. So they always assume the worst. Second of all, we still have a nice higher low trend. This is on the daily, but we also have a lower high trend. So I can tell you from here that a move is coming. In which direction, I don't know, but it's going to be big in either direction. So if they lose the orange line here, which I already put as a trigger for me, or if they go above this line here, roughly, how high can they go? So when a range goes from here down to a pinpoint, they usually gather enough energy that they want to bust out in one way or another. I don't usually try to predict which direction. I can guess, but that would be a guess. So if I were to put money on the line, I would wait for the breach and hope that I would have time enough to catch it. Otherwise, I'd end up buying a whole bunch of false moves or false alerts. So the question here is this a catchable dip? Well, first of all, it all depends on when I got long. So if I got long here, maybe, but if I got long here, not so much. I don't like to, quote, average down unless I have a lot of time in between or a lot of distance in between. So if it's $1 or 2 or 3 or 1 or 2 or 3 or 5% lower than when I got in, maybe it's not time. The averaging down is if something got cut in half, then I buy more or double up if I still believe in it, hoping that a small bounce will get me back whole. So that's the idea of between averaging down, not just stomping your foot and say, I want more of it, just because when you're still at about the same level I entered. So it doesn't make sense. So to answer the question is maybe it's time to buy the dip. It all depends on time frame, investor time frame. So I can tell you what are the lines that matter for me. Let me see. Okay, so this is clearly a line to look at. This was the headline move. So clearly it marks the point where if they lose it, the bulls, then Roku is liable to go down a lot further. So is this a meaningful line? I look left and definitely is. Look at this cluster. That was the top end of the earnings debacle reaction. Not that the earnings were a debacle, just a reaction. And that was kind of a base from which they jumped, kind of a bottom from which they fell. This was an overshoot, so it's a zone. So this is a support zone. If it fails, then I also am looking at some sort of a neckline that is breached. You know, if it depends on how loosely you interpret. Let's see here, patterns. So this is a neckline that is being attacked, and if it's lost, it's going to result in some sort of an inverse cup and handle. Call it what you want. Caterpillar, if you put a couple of horns and feet, and they're going to go about the size of the feet. A neckline is being attacked. Once the neckline is lost, they're going to overshoot lower. How far lower? I mean, this would be the first place I'd look at, or lower. Depends on the market. If the market's falling, then this is a momentum stock. It's going to run faster than the market. It's like Shopify, you know, they run fast, or Amazon, they run fast in either direction. What's another level to look at? Exactly where my cursor is, because this was a platform from which they rallied this whole thing. So arguably, 110-ish was the base for a 50% rally. I bet you I had a video back then saying that if they take out this line, that they would get up and running. So Roku is an emotional ticker. I'm sure I offended somebody at some level here by saying one thing or another. I can draw lines all kinds of different ways, but it all depends on personal time frame. So I can say, okay, look at this trend of, whoops, I'm going to do it here. It's going to look wonky, but that's because I didn't set up my chart well enough for it. Okay, so I'm going to say they're going to do this, this, this. I'll fix it after the fact, trust me. Anyway, so the idea is if they breach one side or another, they're going to go in that direction. And it's usually not a line up. I could have done up like this down here. But here, I don't want to guesstimate how deep they go, but it's got risk down to here-ish. On the way up, they're going to break out from the trend line, but they're going to hit levels. So this is where people like to chase trend lines. I prefer to chase levels. What does that mean? I prefer to see a clear of this before I chase the breakout of this descending trend line. So some people, as soon as they see a price move above the trend line down here, say, then they start running, because this really trend line is not going to get breached up here. It's going to get breached somewhere down here, right? So then they start chasing. I'd rather see a move above there. That's why I did it the way I did it. Above here. And this will be a stopping point, because that was an emphatic fail. So was this level. That's why I put this one here and this one here and this one there. So, okay, maybe they want to get back to this point in time, but they have so many failure levels in the way. So these are stopping points, and that's how I designed these little things. So if they lose this low, then they're going to wish lower. If they go up above it, then they have some lines of contention. So instead of guessing, I can do the same thing in here. So it depends on the speed of the trader. You know, I can do this type of a thing. So it all depends on who's trading and how fast. So I don't trade this fast. Sometimes I do, but I don't aim to because I'm busy all day. So I'd rather take a directional bet once I see clear breakout up or down with clear targets. Otherwise, I don't mess with it. So is it time to catch Roku? Yes, but it all depends on the time frame and the goal. If I'm in it for the long run, okay, so this is where I get whole with the people that get offended when I say Roku could fall. Roku is super expensive from the traditional sense. 3-digit PE, if not losing money still. So actually, yeah, it still loses money after 17, 18 years in existence. But up until recently, the environment wasn't as conducive as now. Now everybody's moving to streaming. So we go from living room set boxes to stream content. Yes. Anyway, markets are open. I went long the VIX. Okay, so markets are moving towards gobbling up media from streaming, and Roku is well set to profit from that one way or another. I don't know how. I don't pay them money. I have a couple of gizmos I bought on Craigslist, so because I have a couple of older TVs. But in theory, hey, if Disney's succeeding, if Netflix is succeeding, Roku should succeed. But it's up like 300%, which is 10 times more than Disney, Netflix, and the markets. Is it that much better of an opportunity? I'm not sure. But the bet long term is a valid thesis. I don't subscribe to it at this level. I think it's going to have a come to Jesus stock. But the market assigns it that valuation, and it's okay if they show the growth. I looked the other way on Amazon for a decade when everybody hated it because it was delivering growth. So if this guy delivers the same kind of growth and excitement, then yes, overvaluation is totally fine. So I won't short it on principle. I can short the price action. And this is what this video is about. I will trade the price action rather than trade the stock. If it falls down to here, I'll sell put spreads in it, but not up here. Nick signing out.